Just reading an article at the Financial Review today, which mentions that China's economy is going to grow at some 8% next year, which is going to trigger a pretty large spending spree of our iron ore. So that's propping up our economy at the moment. So that's kind of proving that, you know, the economies to an extent are working well together at the moment, despite everything else that's going on.
Yeah, it sort of reiterates what the Prime Minister said at the start of the week, which is that despite all the geopolitical tensions around, you know, the coronavirus and also Hong Kong and all what's going on with the South China Sea, that he's probably right in saying that the actual trade relationship is still incredibly strong. And what also came out, and that number you're quoting actually is what Rio Tinto are now forecasting for GDP from China for next year, between 7 and 8%. They showed their numbers last night were not only incredibly strong, but it also showed that Australia's exports to China at one point in the second quarter were as high as 42% of our total trade. Normally it sits around about 36 to 37, so it's got even higher, and that is not just around iron ore, although 90% of their earnings came from iron ore. Copper and coal was also part of that. The next part that's also very interesting, and everybody's getting quite interested around what's going on the gold price, is that actually gold became our fifth largest export because tourism and education have obviously fallen off the cliff. They've fallen out of there, but also that price increase. And that's possibly why, you might argue, why Rio is going down that way and moving towards gold. But it was very clear that, as you said, iron ore will be a major driver in 2021 of our revenue. It'll be a major driver for government coffers. And it's still well north of 100 US a tonne. And that is also down to the fact that not only are we doing quite well, unfortunately Brazil is not. Even though they're starting to reopen, that was also a major reason why Rio has done so well and why our trade balance is doing so well.
There was a bit of a mixed bag when it comes to inflation. What does this mean for the bounce back, I suppose, if we can put it that way, Evan?
Yeah, so look, headline inflation was really mixed, as you alluded to. It does get distorted by the childcare rebate, which basically saw a 95% plunge in consumer price inflation. The reason for it, obviously, the cost to you of childcare was basically free. It also explains why things like education was down about 16.5%, because a lot of people were keeping their kids at home because that was forced on the lockdown. What was interesting and why it's a mixed bag is housing. You've got to very much look at rent and rental income, rental price. That is actually showing a more fundamental change. It is declining. It's the first decline we've seen in around about 7 years. And it's moving at a rate that would suggest that over the next 2 to 3 years, rents could actually be lower still than where they currently are, which are affected by the coronavirus. So that's the mixed bag, is that what has been a major support for inflation, for asset prices in this country, has been things like investment properties, but also rental income. That was the one that was the big standout yesterday, and that's where the mixed bag is. That if we did see rental income continue to actually taper off, you could actually therefore see inflation being at or below 1% over the next sort of 2 to 3 years, even though we have been averaging more around 1.9 to just shy of 2.
Okay, and just finally, Evan, what's your view of the markets at the moment?
Look, markets at the moment are doing pretty much what you would expect, and I know that's a hard thing to argue because they are being stimulated by central governments, by central banks. That's not changing. We know earnings are going to be terrible. Earnings season has now officially started, and we're getting what we expected, which is about a 20 to 25% decline in earnings. If you look at what's going on in the US, they won't change. What I will say is that stimulus is going to be a support. So we are basically hovering and have been hovering around 6,000 points for the ASX, and are likely to sort of move in either direction. We don't see the world getting worse, although it is a horrible scenario we're in, and we don't therefore see much, but there isn't any signs that would suggest that you're going to see an explosion for the foreseeable future. A vaccine will be the sort of the catalyst, obviously, for a change of that call.